Well, we like the healthcare sector for some long-term secular growth trends. You have advances in medical technology, you have an aging population in many countries, and importantly, a growth in the healthcare spending by many emerging economies. Now in the US, of course, the Affordable Healthcare Act of 2010 was very disruptive, but having said that, we think the dust has settled, that many more people are now covered than were before the legislation passed, and therefore provides a greater, larger marketplace for specific healthcare companies to provide their services to those new consumers. For example, our favourite medical device company at the moment is Becton Dickinson, which is the world's leader in needles and syringes and the manufacture of them. They produce over 29 billion syringes a year, which accounts for over 70% of the world's market for needles and syringes. Now that doesn't sound very exciting, but if you think about the business model, needles, syringes, they're used once, they're thrown away, and more are bought. And there's a strong annuity-like stream of earnings. And add to that that we think the company is very fairly priced, we think that's a compelling opportunity for the long-term investor. The growing profitability of Becton Dickinson allows it to have a very strong and consistent return on equity. At Jensen, we require a company to have at least a 15% return on equity every year for 10 years. And that's a very high quality pool of companies that we buy from.